So CDs, certificates of deposit. This is an FDIC insured product, deposit product. So it's kind of like the first cousin to a savings account, with the biggest difference being a CD offers a fixed term, giving the bank the stability of you committing to a certain amount of time of that money staying in deposit versus the liquidity that comes in a savings account where you can get your money at pretty much any time. Because of this guaranteed time frame, the bank is willing to pay you more interest because they can be certain that that money will stay on deposit with them for a certain amount of time. Versus savings accounts, in most cases, they will have lower interest rates because the bank can never be too certain when you're going to withdraw those deposits. So I had an interesting interaction with the client because I am not enormously pro CD, but I am not anti CD. And we're in an economic climate right now where CDs can make sense for people who are just sitting in cash. So I have been reaching out to some of my clients, particularly ones who I know for sure keep 5 to 6 figures in savings that are sitting in cash and are not ready to invest. So I reach out to these clients. In the last 3 to 4 months, the institution that I work for has been giving very, very generous CD specials where you can get pretty reasonable interest rates on pretty short terms, giving clients the ability to ride out the current economic cycle in bits and pieces and get an okay return on their money in the meantime, mitigating the damage that inflation is doing to their purchasing power. CDs, like any other deposit product, is not ever going to usually keep up with inflation, but it is mitigating the loss from inflation. So I've reached out to several of my clients and been able to help them establish CDs with their savings. And one client in particular that I was working with, he is an orthodontist from Greece. And he's a very nice guy. And I helped him establish his original relationship about 1.5 years ago, at which point in time I introduced him to our, we'll say, upper level premium banking relationships, because he had over $100,000 or over $150,000 in deposits that he was bringing to our institution. So I've been working with him ever since on a one-on-one basis and making sure that he's getting the most out of his banking relationship, check-ins, and anytime there's shifts and opportunities, I'm contacting him to help him move his money around in places where he's getting the most money, most value for his deposits and his relationship with us. So in the process of working with the client, we were establishing his CD, and he was basically taking instruction from me on whether, what term he should be doing, what interest rate he can expect. And in the process of doing so, he was reviewing the rate sheet, the information going over the rates based on the terms. And he asked, he said, how is it that they're paying a better interest rate on this CD versus the one that you're instructing me to open or you're guiding me to open? So I thought it was a great topic because what it did was allow me the opportunity to explain to him that, yes, this particular CD has a more attractive interest rate, but this particular CD that I'm instructing you to open is going to actually get you the most money for the window of time you're willing to secure the CD. And it was a light bulb moment for him, and I thought it would be very valuable to bring to you guys in this video. So when it comes to any type of investment or basically return on investment, I on this channel and many other financial experts do agree that time is the top asset. Time will beat out other larger returns or even larger deposit amounts in investments. Basically meaning that the longer you invest, even if you're not getting as high of a return as somebody else, you're still going to usually get more in return than the person with the higher return. So I had to explain this to my client, who again was a relatively affluent individual, but he immediately saw a higher interest rate on one CD that was only a 3-month term versus a slightly lower interest rate on the CD that he was doing, which was going to be for 12 months. And this is important financial math that you need to know whether you're going to be doing a deposit product or an actual investment product. This is very valuable information. You need to have a very good understanding on what route you need to go to get the best return on your money. Because had I not been guiding him, or had he been with another banker who maybe not have had the financial sense that I have, they may have, oh, you're right, let me switch you out to this product so you can get a better interest rate. And he would have ultimately lost out on the end, and because he's willing to put the money up over an extended period of time. He was willing to do 12 months. So the time frame wasn't an issue. So now it's about what is the maximum return you can get in that 12-month time. Is it going to be doing the CD at 4% for 3 months and then taking the risk of trying to reinvest it back in your CD 3 months, at that 3-month mark, and the interest rates not being the same or not being better, or getting a locked in 3.5 or 3.75% on a 12-month CD? You're going to, as I had to explain to him, you're going to make more money because you're invested for a longer duration of time. So do not get sticker shock or let the nominal return, the number, trick you into thinking that you're getting more for an investment, because you might be getting 7 or 8 over here and 5 or 6 over here, but you're not paying attention to the fact that you're invested twice or 3 or 4 times the time on this side. Time will get you a better return than rates in many cases. The return on investment is best amplified by time. So keep that in mind. I also wanted to put down in this video that you guys need to understand, if you're sitting in cash, if you're not willing to invest and you're not using it to start a business, you're not using it to pay off debt, you need to find a quality CD at a quality institution and let that money at least chip away at the damage inflation is doing on it. CDs are really respectable products at the right time, and this is a reasonable time frame for CDs. Check with your local institution, regional institution, or whoever you have the strongest banking relationship with, because this is going to be your opportunity to make sure that your cash is getting reasonable returns until you figure out how to deploy it to better elevate your finances. This is JP from Blueprint for Prosperity, checking out. I want you guys to stay focused, stay in motion. I'll see y'all in the next one.